Welcome to the implementation training for Oracle Fusion Accounting Hub, covering the accounting transformation configuration activity. In this presentation, we will cover the accounting transformation configuration within the Oracle Fusion Accounting Hub FAH implementation. After looking at a brief overview of the implementation process, we will go into details of the steps using working examples on analyzing source systems and reviewing transactional data, defining and building transaction objects and extracting the data, and setting up rules to generate journal entries. Then we will cover use cases for advanced features and implementation considerations, look at the setup tasks, and discuss best practices with tips and ideas to help with implementation decisions. This presentation will also include references to additional training materials that are related to this topic. Oracle Fusion Accounting Hub provides a fully integrated accounting transformation configuration solution that converts transaction data into subledger journal entries. The accounting transformation configuration activity starts with a thorough study of transaction systems to analyze the life cycle of transactions and the data, and to identify the accounting and reporting requirements. After the analysis, the integration of the transaction system starts by defining and building the integration objects. Finally comes the setup of accounting rules to generate journal entries and testing and migration to move to a production environment. Let's begin by looking at the details of the process by working through the implementation steps for a sample transaction system. We will first review the transaction data. The implementation starts with a thorough analysis of the transaction system that will be integrated with the Oracle Fusion Accounting Hub as a source system for accounting transformation. We determine the transactions that need to be accounted and clearly identify the activities in the life cycle of the transactions. Our sample source system is a loan application that tracks two types of mortgage loans, fixed rate and variable rate mortgage loans. The life cycle of each type of mortgage loan is different. There are different types of activities or events that occur during the life. For each type of mortgage loan, we identify such events and determine whether they have accounting and/or reporting implications. This will be our event model, with each loan type being an event class and each activity on a loan being an event type. Accounting rules are defined at the event class and event type level. If a certain type of loan or activity needs a different accounting treatment, the event model needs to be defined at that level of granularity. In this example, variable rate mortgage loans have an interest adjustment event which may require accounting differently than other events. Therefore, fixed and variable rate mortgages are modeled as separate event classes. Also, a scheduled payment on a loan may have different accounting treatment than a late payment. Therefore, each is defined as a separate event type to enable definition of different accounting rules at that level. Next, we analyze the transaction data. We determine the transaction data that is going to be needed for accounting, such as currency, amount, and date for accounting, as well as the data that is going to be needed for reporting, such as customer information and loan attributes. The minimum information needed for accounting generation will be transactions currency and amount, accounting amount or conversion information, and accounting date. Depending on the complexity of the accounting rules that will be defined, further information may also be required. A good example will be the information needed in generating the account combinations. We will need either the account combination itself already captured in the source system or other attributes to allow deriving it within FAH while generating journal entries. When analyzing the source system current reporting requirement, some potential questions are as follows. What is the required supporting information that needs to be captured on a journal entry? Where should the information be displayed? Do we need a description at the header or line of a journal entry? Do we need information to classify group or slice and dice journal entries? In this example, branch, loan number, loan description, loan rate details, and customers are identified as needed information. Now is also a good time to consider how frequently the data will be pulled into FAH. This is driven by the immediacy and volumes of accounting requirements. If volumes are high or there is need for most up-to-date accounting and balance data, source data will be pulled in daily or more frequently. Data can be brought in at the same level of detail as in the source system, if that level of detail is needed as accounting or reporting information. Or data can be summarized to minimize processing and storage volumes. After completing the analysis of transaction data, we will go through the integration process of the source system. The source system or systems will be registered as one or more subledger applications. A single source system can be registered as a single or multiple subledger application. Different subledgers enable concurrency in accounting generation. You can run the accounting process for different applications at the same time and get faster results. Using the same subledger enables sharing of accounting rules, such as account rules that can be defined once and used for all types of events within the subledger application. Using the same subledger also makes reporting of data easier, as there is no need to consolidate data across applications. After registering the source system, we continue defining the event model to record which transaction types and activities have accounting impact. Group event classes into process categories so they can be processed for accounting together. Define the event class details, such as the transaction identifiers and objects that will hold the transaction data that is pulled in. And map the life cycle of the transactions by defining the event types for the activities with potential accounting need. A transaction object is the data model containing transaction information pulled into FAH to be used by the Create Accounting program to create subledger journal entries from accounting events. Transaction objects hold source data for accounting events. In our example, data from a mortgage loan system, such as loan number, customer information, loan type, loan dates, and amounts, etc. Each attribute on the transaction object can be used in creating accounting rules. The Create Accounting program uses the data on the transaction objects and the accounting rules to generate the journal entries for eligible events. Transaction objects will be database tables defined to hold the transaction information that has been identified as needed for accounting and reporting. These objects will be populated by pulling in data from the source systems at the desired frequency and level of detail. As data is pulled in, events will also be created within FAH as the triggering point of accounting. All of this needs to be done prior to an accounting run so that the events and transactions data is available for processing. By running the Create Sources process, each column of a transaction object becomes a source that is later to be used in accounting rule definitions. Once the sources have been created, you can edit source definitions. For example, you can give sources user-friendly names and descriptions to help in the accounting rule generation. The next step is the mapping of sources to accounting attributes. Accounting attributes are predefined fields that map to components of journal entries, such as entered amounts, accounted amount, accounting date, and currency. The mapping of the sources enables the Create Accounting program to get the values when generating the journal entries. For example, the value for accounting date on a journal entry will come from the source that is mapped to this accounting attribute. Remember, the source is a column on the transaction object holding the transaction data. So accounting attribute assignment is basically identifying which transaction attribute is to be used for what attribute of the journal entry. In our loan examples, the source loan amount is mapped to the entered amount accounting attribute. The source loan date is mapped to the accounting date accounting attribute. Now we start with the final stage of the implementation to define the accounting rules and then test and migrate them into a production instance. Here is a journal entry for our sample mortgage loan application. The journal entry is created based on a set of accounting rules called a journal entry rule set. A journal entry rule set is the collection of sub-rules to create a balanced journal entry for a given event class and type. Each sub-rule creates a part of the entry. The journal line rule determines how each of the debit and credit lines will be created. The account rule determines the account combination to which the debit and credit lines will be booked. The description rule determines what descriptive information is to be stored on a journal entry header or line. The journal line rule determines how each debit and credit entry will be created. It defines the accounting class, the side as debit, credit, or gain/loss, the sources that will drive the values on the entry, such as amount, and other advanced setup features such as business flows and summarization options. You can add a condition for a journal line rule to determine under which conditions the rule will create a line. The account rule determines the account to debit or credit. An account rule can be defined to derive the full account combination, only a particular segment value, or a value from a value set. The derivation can be based on a source to use the value of a transaction attribute. For example, if an account is already captured as part of the transaction data, you can define an account rule based on the corresponding source and have the entry booked to that same account. You can also use given accounts in the account rule definition if you define the rule for a specific chart of accounts. Alternatively, you can define mapping sets to map source values to account values and use those in the account rule definition. We'll discuss mapping sets later in this presentation. You can get creative with account rules and define complex ones. For example, define an account combination rule to get the template liability account. Then define a segment rule to overwrite the balancing segment with condition based on the organization. You can define an account rule with conditions such that a different account is used based on the condition. You can define a mapping set when you have a matrix of input values that produce distinct output values. A mapping set definition includes the sources that will supply the input values and the mappings of the input values to output values. The mapping section displays how input values are mapped to output values. A mapping set can be defined to derive a value for an account combination, a particular segment value, or a value on a value set. Mapping sets are used in account rules and help eliminate the need for multiple priorities within the same account rule and complex conditions. A mapping set can be defined to return values for several charts of accounts and is thus very recyclable. You can define and use a mapping set in different sets of rules defined for different charts of accounts. You can use description rules to store a description on journal entry headers or lines. You can define description rules using constants such as descriptive text and sources as transaction attributes. You can add a condition to a rule detail to set under which conditions each rule detail will be used. A typical description would be transaction type and number or customer name information. Supporting references is a powerful tool to allow tagging journal entries with transaction attributes. You can use these tags to report on entries, reconcile entries back to source systems, and even maintain balances at the attribute level. Description rules and supporting references both allow storing transaction attributes on entries. Descriptions allow identifying an entry on UI pages and reports with any user-recognizable transaction information. As mentioned earlier, also adding custom text in the description helps add context to the transaction information. In this example, one of the lines has a description showing the rate for the loan. Supporting references allow the capture of several transaction attribute values on a journal entry header or line, with each attribute available as a separate value. Description, on the other hand, is a single string which can contain several attribute values. The difference makes supporting references more suitable to use as a reporting dimension where you may want to slice and dice the data. This example shows location, contract, and channel of the loan origination as the supporting information available on the journal entry line. Optionally, you may choose to maintain account balances for any of these attributes. When subcomponent rules are all defined, you associate them with a particular event class or type to determine how a balanced journal entry will be generated for that event class or type. This construct is called a journal entry rule set. It determines the debit and credit lines to be generated, which accounts to use, how to determine the accounting date, the descriptions to stamp on the entries, as well as the supporting references to capture on the entries. Journal line rules and corresponding accounting rules are mandatory to be able to generate an entry. As mentioned before, description rules and supporting references at the journal entry header or lines are optional. When setting up journal entry rule sets, determine the event class and event type assigned to the journal entry rule set. A journal entry rule set is a template of the actual journal entry. Therefore, you can assign subcomponent rules at the header and line levels in a journal entry rule set. At the line level, classify the type of each journal line as a debit or credit or gain or loss line. Subcomponent rules for assignments to journal entry rule sets are available for assignment into a specific journal entry rule set because of compatibility in source assignments to event class. If the subcomponent's rules, with the exception of supporting references, are defined with sources, all sources must have been assigned to the same event class that is associated to the journal entry rule set. For supporting references that are assigned with more than one source, at least one of the sources must be assigned to the same event class that is associated to the journal entry rule set. Additionally, supporting references and description rules that are assigned with source assignments at the line level can only be assigned to journal lines. Supporting references and description rules that are assigned with source assignments at the header level can be assigned to journal entry header or journal lines. Also, consider the compatibility in chart of accounts and account rules assignment to the journal entry rule set. If the journal entry rule set is defined with a chart of accounts, and if the account rule is assigned a chart of accounts, the account rule must also have the same chart of accounts as the one assigned to the journal entry rule set. Otherwise, the account rules assigned to the journal entry rule set must not be assigned any chart of accounts. The accounting method is the group of all journal entry rule sets that will be used to generate accounting for a ledger. A journal entry rule set is assigned on an accounting method for each event class and type for which the accounting needs to be generated. As accounting requirements evolve over time, assignments can be end-dated and new rules can be put into effect with new as-of dates. When defining an accounting method, assign journal entry rule sets for event classes and/or event types with an effective non-overlapping assignment date. Then assign the accounting method to a ledger. If the accounting method is associated with a chart of accounts, the assigned journal entry rule set must have the same chart of accounts or be generic. When assigning an accounting method to a ledger, you can use accounting methods defined either for that ledger's chart of accounts or without a chart of accounts. The assignment status must be active for the rule to be used by the Create Accounting program. This activation can be done online on the UI or by running an offline process. The journal entry rule set assignments in accounting methods are used by the Create Accounting program to create journal entries for the specified event class and event type. Before going live with the accounting rules, it is important to thoroughly test the rules and ensure the entries generated match the expectations. If entries do not match expectations, the Accounting Event Diagnostics Report can be used to analyze the transaction data that was used for the generation of a particular entry. This helps identify any rule definition that needs to be modified to get the desired accounting. Once testing is completed, Oracle Fusion Setup Migration Services can be used to move the accounting rule setups from a test environment into a production environment. Advanced implementation considerations. There are several advanced features that can be used for efficiency in processing and accuracy in results. You can have consistent accounts and descriptions used on related journal entries. You can have accounting amounts and foreign exchange gain-loss calculated during journal entry generation, and you can have periodic accruals reversed automatically. You can set up transactional relationships to link related events, such as linking a loan payment with the loan origination. This helps to ensure that the same loan receivable account is debited and credited at both the loan origination and payment time. This will help reduce reconciliation needs as appropriate accounts will be used on downstream events through the life cycle of a transaction. In addition to the accounts, this feature will allow using the same description and supporting reference across such linked entries. For the setup of this feature, all related journal line rules need to be linked with the same business flow class, and the business flow option needs to be turned on for each downstream linked journal line rule. In this example, the same account from the loan receivable debit entry for the loan origination event is used in the loan receivable debit entry for the interest accrual event and the loan receivable credit entry for the loan payment event. When the line description is also linked, the same description for the loan receivable debit entry is used on the downstream loan receivable credit entry. You can set up journal entry relationships so that related debit and credit lines share certain values. For example, assume that for a loan origination entry, the cash account is required to have the same cost center segment value as the loan receivable account. By defining a related corresponding entry relationship in the journal entry rule set, you can satisfy this requirement. This feature also optionally allows you to have the same description on these related lines. For the setup of this feature within the journal entry rule set, linked journal line rules must be identified by selecting the Copy from Corresponding Entry option from the Account Rule, Segment Rule, and/or Description Rule. If you have periodic accruals that need to be subsequently reversed, you can use the Periodic Accrual Reversal feature. This feature allows automatically reversing accrual amounts based on the rule defined. For example, first day of next accounting period, last day of next accounting period, or next day. Assume that our financial institution charges customers a maintenance fee at the end of the month. For premium customers, the fee is waived on the first day of the following month. We can use this feature to schedule the automatic reversal of the fee without needing a separate event or transaction data. For the setup, the accrual reversal accounting date accounting attribute should be mapped to a date source at the event class level. Date sources could be first day of next accounting period, last day of next accounting period, next day, or any other date type of source. Relevant setup tasks. The setup and maintenance work area enables configuring applications to match business needs. The prepackaged sequential task list guides you in performing the required steps. When configuring accounting transformation within the Oracle Fusion Accounting Hub, you will initially create an implementation project for the Oracle Fusion Accounting Hub offering and register the source system application and set it as the context to continue with the setup tasks. For subsequent maintenance of the source system setups, you will select an existing subledger application as your setup context and perform any edits. All setup tasks are accessible under the Accounting Transformation Configuration activity in the Oracle Fusion Accounting Hub offering. There are two groupings of tasks under Accounting Transformation Configuration. Register Source System application includes tasks for integrating the source system with the Oracle Fusion Accounting Hub. Manage Accounting Rules includes the task to define the journal entry generation rules. We will take a look at some best practices that we recommend you consider for your implementation. When registering the source systems, a separate subledger can be used for each source system, or even each transaction type within a source system. This enables you to run accounting concurrently for multiple subledgers at a time and results in faster processing of all accounting. If reporting across accounting of several transaction types or source systems is more important, then you may consider consolidating the transaction types or source systems in a single or a few subledgers. Note that accounting rules are share-enabled only within a subledger. Therefore, having a single subledger has the additional benefit of rule sharing and minimizing the setup maintenance. If immediate creation of accounting entries is an important requirement, then events should be raised and transaction data should be pushed as soon as possible. Then accounting can be run frequently and posted balances will be more accurate and closer to real time. By delaying the event raising and date push, you can consolidate the transaction data prior to the push and control the volume of entries generated. This can be done when summarized entry generation is more important than the immediacy of accounting. Note that the consolidation will impact the level of granularity you get in accounting and reporting. Too much summarization may lead to a loss of detail in reporting. You can define multiple sources for each supporting reference segment with the condition that each source must not have the same event class assignment. This enables you to define supporting references once and reuse them multiple times across multiple journal entry rule sets for different source system definitions, that is, subledger applications. If there is no balance to be maintained for a supporting reference and no slicing and dicing is needed for reports on supporting references, consider using a journal entry header or line description instead of the supporting reference feature. This is recommended for accounting engine performance considerations. Using supporting references instead of descriptions will impact the performance. Mapping sets allow the mapping of input source values or transaction attribute values to account combinations or segment values. They can replace conditions or account rule priorities. For example, instead of defining an account rule with multiple priorities, each for a different account combination based on a transaction attribute, you can use a mapping set. In the mapping set, you map each transaction attribute value to an account combination and use this mapping set in a single priority-based simple account rule. The mapping set maintenance will be simpler than that of the account rule, as you can use a mapping set and account rules that are each defined for a different chart of accounts. Within the same mapping set, you can define the transaction attributes mapping's maintenance cost across different charts of accounts. Thus, the mapping set is highly reusable, resulting in lower maintenance costs. Account rules can be used in a variety of ways. You can define an account combination rule for each account, a segment rule for each single segment, and an account combination rule as a template for an account type and segment rule to override some segment values. Using such overriding rules can minimize the number of rules defined and thus the maintenance effort. You can maintain a history of journal entry rule set assignments in an accounting method. Over time, as the accounting rules change, instead of deleting assignments and replacing new ones, you can end date the existing assignments and add new ones with effective start dates. This maintains a history of the accounting rules and can help with audit documentation. Additional resources. Additional training materials include Oracle Fusion Subledger Accounting Functional TOI, Oracle Fusion Subledger Accounting UPKs, including Define Accounting Rules and Create Accounting and Inquiry. Other implementation training materials, Oracle Fusion Accounting Hub Implementation Overview, Enterprise Structures Implementation Training Part 1, Enterprise Structures Implementation Training Part 2, and General Ledger Implementation Training. Additional resources are Intercompany Implementation Training, EBS General Ledger Integration with the Oracle Fusion Accounting Hub, PeopleSoft General Ledger Integration with the Oracle Fusion Accounting Hub, Financial Reporting and Analysis Consolidation and Budgeting Implementation Training, and Hyperion Data Relationship Management Integration with the Oracle Fusion Accounting Hub. This concludes the implementation training for Oracle Fusion Accounting Hub covering the accounting transformation configuration activity.